Changing your mortgage lender might sound like a bit of a hassle, but it could save you thousands. In this episode, I'm talking with Emma Jagger, Senior Mortgage Product Manager at Skipton Building Society, and we're going to be talking about when it makes sense to change, how to do it smoothly, and, of course, what to look out for when comparing offers. Emma, what are the main reasons that people do change lenders? What kind of prompts it?
Yeah, there's lots of reasons that people may choose to change lender. So they may go to the lender that offers them the cheapest deal, and they're looking to save money. They may be using a mortgage advisor or a broker who has given them the advice that that is what they need to do. Mm-hmm. Or they may simply not have the loyalty to their existing lender as well. But it's quite a personal decision as to why people may want to change. So one thing that's right for one person may not be right for the next person.
And can you talk us through the process? I'm kind of assuming people would talk to their existing lender to start with and then explore the options. But what are the different steps that people would go through?
So people would normally be contacted by their existing mortgage lender to signpost what's happening and that the product is coming to an end. But if they choose to remortgage or take their mortgage to another lender, it's essentially a brand new mortgage application. So it will typically take longer. They may need to provide things like income verification, ID, bank statements, and then they will also need to engage with a solicitor as well, who will then do all the legal work. So it is more lengthy and potentially a little bit more complex than staying with their existing lender, but it's a personal decision, and
but it is a brand new mortgage, so it involves conveyancing, presumably evaluation of the property. So it's kind of starting again, but it's a big moment. How long does it typically take?
Well, I mean, that is like asking how long is a piece of string. It can vary from lender to lender, and then there will be solicitors' timescales as well. It does typically take longer than if you're staying with your existing mortgage lender, but you will be guided throughout the whole process as to where things are up to. It's important to just bake in some time to make sure that if you don't want to go on to your lender's reversionary rate that's typically higher, that you've got time to kind of see that whole process through and get your new product in place seamlessly.
So if you're going to remortgage, you've really got to start properly early.
Yeah, definitely. It's important not to leave it to the last minute if you don't want to go on to the reversionary rate.
Is there anything that people typically forget or kind of mistakes that they make along the way?
Yeah, not necessarily mistakes, but there are potentially some costs involved. So there's things like evaluation will need to be done, and that may incur a fee. There could be legal fees, and there could also be a product fee associated with the new product that you're taking. There's lots of options out there for people. So it's important to have a look at the product and what that comes with. But if it doesn't come with those things, then there could be some, extra costs involved for customers. And then the other thing to be aware of is, with it being a brand new mortgage application, there will be a hard search on a customer's credit file, which is, a standard thing to happen. But if you are thinking about taking out any other borrowing at the same time, that financial institution would then be able to see that, this person's had a search for a mortgage on their credit file, and that could be taken into consideration.
Okay. When somebody is comparing new deals, and I'm just really conscious there are so many variables, it's not straightforward, it's not just about the interest rate. Can you just talk a little bit about what people should look for? I guess each person is in their own individual situation.
Yeah, so it's a personal decision. Thinking about, whether your primary goal is to save money. And, you can always get advice from a broker or mortgage advisor and they can guide you through that process to actually arrive at, the right product or outcome for you.
If a homeowner's nervous, how would you reassure them through that?
So it does sound like a more complicated process. However, there's support every step of the way should you need it. So, lenders will be able to help mortgage advisors or brokers will be able to help, and solicitors as well. And quite often the kind of documents or the questions that they may ask, you'll have the information, to hand. So it might feel like there's questions asked, but actually it's quite easy to resolve. And they can keep you posted on timescales and, give you the support that you need every step of the way.
You're putting my mind at rest. Is loyalty a thing? Is it a factor? Is it always rewarded?
Yes, sometimes. So there's no requirement to do so, but lenders are required to give customers fair value. And what we are seeing is lenders doing things to reward their existing customers. But what that doesn't mean is offering them the cheapest rate that exists. So that's why it's really important to consider all your options and choose the right product that's for you.
And can you talk a little bit about how Skipton themselves take the kind of stress? I mean, you're being careful to say it's not stressful, but it is. It's a big moment. How does Skipton work with people through that?
We have a brilliant team of mortgage advisors. We work really closely with our broker partners, and we have a team of underwriters as well that will help people along the way and keep them posted and tell them exactly what they need.
Can you sort of walk us through the process? How long does it typically take?
It's a brand new mortgage application, so you're essentially starting from scratch. You may be asked to provide ID, income verification, bank statements, and then on top of that, you've got a valuation to happen, and you'll need to engage a solicitor. So it does take longer than if you are staying with your mortgage lender.
So there's quite a lot involved.
Yeah.
Although there were people to help you through it, so people shouldn't be sort of worried or scared about it. But there has to be a reason to change.
Yeah.
How do people compare the deals, and who's there to help them with that exercise? Because there's a lot to compare.
Yeah, there's a lot. There's thousands of products out there on the market, and it's where do you start filtering them down? We have a great team of mortgage advisors. There's also brokers that give whole of market advice, and we work really closely with them as well. So they are really good, best placed to understand your circumstances, what your preferences are, and then start to whittle that down and recommend the right product for you.
So if somebody calls up and says, look, this is my set of circumstances now, this is my rate, this is my lender, this blah, blah, blah. Will somebody actually work with them? Okay, it's definitely worth you changing.
Absolutely, yeah. So you typically get that with brokers who will, scour the whole market to see what's out there and whether it's worth staying put or actually moving to another lender. But they will come to that recommendation with you by understanding your circumstances, your preferences, any future plans you may have, and you'll be kind of supported every step of the way.
Because life changes, doesn't it? And people's situations change, their income changes, and their ambitions change during the course of having a mortgage. So it's right to reassess it.
Yeah, it's a really good opportunity to kind of take stock of where you are, what you might want to do in your future, whether that is planning to have a family or extend your family. Children can be quite costly. Or whether you have had a pay rise, and actually, does your mortgage currently meet your circumstances? Would you want to pay off a little bit of your mortgage if you can, or actually...
Or do home improvements or something.
Or home improvements, or even, looking at your term and saying, do I need to shorten it, extend it? There's loads of flexibility, and it's a really good point in time to assess that.
Yeah. So on the one hand, it's quite daunting, but on the other hand, it's probably quite therapeutic to go through that process and ask yourself that questions and have some advice and then go forward again.
Absolutely. And also as well, this could be a point where you save money on your mortgage and, your payments reduce every month. And especially where we saw rates increase, over the course of the last few years, people coming off those rates, there's a really big saving to be had in some instances. Yeah. So it can really work out for people.
Thank you, Emma. So it does take a little bit longer, but it's also a seminal and really useful moment to reassess where everything is, and it puts you in control of your interest rate. There are people to help you through it, so take advantage of it. You could lose your home if you don't keep up your mortgage repayments.